Hello, and welcome back to the Sustainability Talks podcast. I'm your host, Patrick Sheehan, Managing Partner at ETF Partners, Europe's oldest and leading venture capital firm focused on backing businesses that deliver what we call sustainability through innovation. In today's episode of Sustainability Talks, we're talking to Ed Daniels, Shell's Executive Vice President of Strategy and Portfolio. Ed is uniquely placed to talk with us about changes in the energy industry. We discussed the rapidly accelerating pace of change, in fact, and aim to answer some of key questions, including, for example, can the global energy incumbents be leaders in the transition to clean energy? Do they really want to be? Will their ownership of historic assets actually become a disadvantage? How can they possibly get to net zero? And finally, is energy just simply going electric anyway? Now, we had a fascinating discussion with Ed, and we really hope you enjoy listening. Joining me for the conversation with Ed is my fellow co-host and managing partner at ETF, Rob Ganisa. Hi, Ed.
Hey.
I know you're incredibly busy, so I very much appreciate you joining us. We have a host of questions we're dying to ask you, but I don't think I need to introduce Shell at all, right? It's not just that Shell is a giant company worth 150 billion. You're in the news every day, and it will be great to understand a little bit about your background and help the audience understand why do you have the toughest job in the world today, running strategy of Shell.
Well, I think, hello everyone. It's a real privilege and a pleasure to be with you. Thank you for inviting me. I think they call that a softball to start with, don't they? In interview parlance. So my name's Ed Daniels. I'm British, if that's not obvious. I'm a chemical engineer by background, and on the 5th of September 1988, I jumped in my car and drove to Shellhaven Refinery and started work for Shell. And here we are 32 years later, having worked in probably all of the major businesses we have, downstream, upstream, our gas business, in technology. I've worked in Asia Pacific, I've worked in Europe, I've worked in North America. And for the last 3 years or so, I've looked after strategy for Shell, and probably the highlight for me has been perhaps repositioning our strategy as of February of this year. We called it Powering Progress, and it's about positioning ourselves to be a net zero company by 2050, scope 1, 2, and 3, working with our customers to drive the decarbonisation of the energy system. That's perhaps a little bit, and you know, just to be perfectly frank, I mean, I think you all know this, but I'll say it anyway. It's the biggest challenge facing mankind by a long way. It's going to be extremely challenging and difficult to transform an energy system that took 120 years to develop to the one we've got today, largely based on hydrocarbons, to one that is going to be sustainable, clean, bearing in mind the world wants more energy tomorrow than it did yesterday or the day before that. So it's a compounding challenge that we really need to grasp and meet.
And Ed, before going into some of those details, I'm really interested in what gets you up in the morning now, what motivates you, because you spend a lifetime in the oil industry, right? And now here you are arguing that it needs to change. So talk me through.
I think obviously you spend a little bit of reflective time on this. So I'm quite an early starter. When you've worked in refining, early starts seem to come with the territory. So at 4:35 this morning, the alarm goes off, and I have no problem getting up, because I just have this real passion that this is the biggest challenge facing mankind, but without any shadow of a doubt. And I know there are other major challenges, but this one is intellectually very challenging. I think it's complicated, it's at scale, and I think maybe this is talking my own book, but in Shell, I think we're under the microscope. Yep. Every activist, every NGO has got a position on Shell. If they want to make a point, they start with us, and I think, which is, you could say, well, that's terrible, but
that is kind of fair enough, though, isn't it? I mean,
absolutely. And in a way, it's great, because if we do positive stuff and if we can make a difference, I think the world notices far more than if somebody who's less well observed does it.
Absolutely, but Shell does account for 4.5% of global energy emissions, right? So yeah. That's a big deal.
It is. Yeah, 1.7 gigatons of
Right.
CO2, scope 1, 2, and 3 are the emissions from our company. It's a huge number. We, we produce 2% of the world's hydrocarbons,
Right.
but we sell probably more like 5-6% of the world's hydrocarbons.
Exactly.
So we're a very significant player.
Yeah, and I want to touch on, in a little, how serious is Shell? You sound really serious, but it's a big organization, and I imagine there's many voices. I want to touch on that, and then I want to talk about can you change? How fast can you change? And then I want to talk about the way you are changing, and your approach to new technology and innovation. And then I think how you're interacting with people like us, actually. But going back to that first point, Shell changing is a hugely complicated thing. You have announced that you will be net zero by 2050, and I'm sitting here thinking, I'm not sure I can understand the concept of a net zero oil company. How does that work?
So, put in its most basic form, we have to work with our customers because the reality is, although we talk about it, scope 1, 2, and 3, it's actually scope 3 that matters.
Right, exactly.
Right? It's we've got less than 100 million tons of CO2 emissions, scope 1 and 2. Of the 1.7 gigatons, it's scope 3.
Right.
So that means unless we've got a way they're going to work with customers to morph their energy usage from being hydrocarbons to being electrons, biofuels, hydrogen, and then I think the world will still be using hydrocarbons in 2050, in my view, and therefore you will need some offsets. So you'll need carbon capture and storage at scale, and you will likely need nature-based solutions at scale in order to make it net zero in 2050. Now, I think beyond 2050, I think you could imagine a lower reliance on offsets, but I think if we want to get to 2050, that you need the offsets. So it's working. The way we think about it, Patrick, is very much we're focused sector by sector by sector. And one of the big changes we made in our organizational structure this year was to say, right, our sales and marketing activities are going to be focused on sectors. So we have a team that focuses on aviation, on marine, on commercial road transport, on personal mobility, on steel and cement, on agriculture, on mining, because I think the challenges of decarbonization are different in different customer segments, and therefore you've got to work with them segment by segment in order to help them get there.
That's very fair. And you're clearly on board. You're running the strategy. How do you make sure everyone else is on board? And I have in mind particularly, of course, that earlier in the year, a court in The Hague said that you weren't doing enough, right? That actually you had to do more. So how do you get coherence around change in such a big organization?
I'm gonna touch a little bit on the court case, and then I'll do your main question. The court case said you will reduce your scope 1, 2, and 3 emissions by 45%. There was a little bit of a subtlety in there. It said scope 1 is an absolute mandate, so you shall.
Right.
Scope 2 and 3 is subject to significant best efforts.
Right.
Is the translation of the Dutch, and with no legal definition of that. So you can imagine that's causing us a few bit of internal gymnastics. But let me say one more layer of detail. We have already, at the end of Q3 this year with our results, we published a plan that scope 1 and 2, we are already committed to a 50% reduction by 2030. So there's a tick in that particular box.
And indeed, I think your remuneration is linked for your senior managers to that, all right?
So our top 16,000 people have got targets hardwired that turns up in their compensation. Okay. Scope 3, frankly, is a work in progress, because I think we've got to think through, what does significant best efforts mean? And I hope you forgive a slightly longer answer here for a moment. If you look at what that means, scope 3 means that the capital stock of the world has got to change, right? So we can build as many hydrogen plants as you like, as many biofuels plants as you like. If people don't have hydrogen trucks to drive in, or they're not prepared to put the biofuels in their jet engines, it's all for the birds. And so this is about, how do we encourage governments to do policy change? How do we encourage manufacturers in order to put hydrogen trucks on the road or battery vehicles on the road? So there's quite a bit of thinking that we're doing about what does it mean for us to drive significant best efforts sector by sector by sector. If I think about the European Union, Fit for 55, probably the most ambitious transformative plan that there is in terms of decarbonisation. If you look at transport sectors, that means by 2030, the Fit for 55 plan talks to about a 20-ish% reduction in CO2 from transport over that period of time. We're a majority transport hydrocarbon sales company, and we're being asked to reduce by double the most ambitious place in the world. And we're going to ask to do that globally. It feels a little bit challenging, but anyway, we'll come back to that. How do you align the organization? The way we're doing it is we're saying, look, carbon now is a very real constraint on us. Just like you can't spend capital as much as you want, you can't spend operating expenditure as much as you want, and we have good business processes around controlling and managing capital, good business processes of controlling and managing operating expenditure, and we're putting in place what we call our carbon management framework.
So you mean you have a sort of internal carbon accounting in effect?
Correct. We've got so each sector. So you take the aviation sector, right? We're going to give them a budget. We're going to say, right, okay, this is it. You've got this of the 1.7 gigatons at Shell. This is your budget. You can knock yourself out. You can do whatever you want. You can move your business from Heathrow to Jakarta. You can whatever, but you don't get any more carbon.
Right.
And over time, we are going to ratchet down that amount of carbon that they're allowed to sell, so that we're encouraging them to say, right, how can you bring growth by bringing in the non-carbon alternative? So in the case of jet fuel, it's going to be most likely bio-derived fuel. What would be the policy framework that's needed for that? What will airports need to do in order to bring that in? So we're working in coalitions to drive that change sector by sector.
Right, and I can see that's how that works when you explain it that way. But then, you know, you've still been, until very recently, looking at that Cambio oil field exploration in Scotland. There's stories about.
Let me be a little bit challenging here, now, right? And it'd be rude if you weren't challenging back to me. But, let me start with it. Here's the irony of Cambo, right?
Yeah.
Whether we produce Cambo or not doesn't make one iota of difference as to whether a company over here buys a hydrogen truck, or a company over here buys a fleet of electric vehicles, or British Airways puts biojet into its fleet. Doesn't make any difference on the demand side. It only has an impact on the supply side, and the only impact it will have on the environment is a tiny amount of scope 1 and 2 on Cambo. So Cambo, cancelling Cambo does almost nothing in terms of the amount of CO2 emitted for the world.
But hold on, I've got to take you off on this in turns.
Yeah,
sorry, Rob, but this is going to go backwards and forwards a bit, maybe, because surely if you spend a lot of money exploring for it, being ready to produce it, somebody's going to pump it out, and so but maybe that's scope 4 that someone in the future does it. But you know, surely we have enough oil. The issue is more the likelihood of stranded assets rather than the need to explore.
Yeah, no, I don't deny there aren't. You know, I think one of the most persuasive arguments I've heard from NGOs and others in civil society is, you know, if you shall make a choice around not producing, that has quite the megaphone is quite loud around the world about the choices that you make, and I accept that point. But I'm only trying to say that that a barrel of oil produced in the North Sea versus, I don't know what the next best would be, a barrel of oil coming out of the shale oils in Dakota. You know,
okay, we'll call this one a score draw, perhaps. And I've got one more question, and I'm going to pass to my colleague Rob, and that's around how you manage your shareholders through this transition, because actually, if I look on the average shareholder websites, people say Shell's great, you know, all those dividends, they're so reliable, and yet this is a future where that's not going to be true anymore, right? And at the same side, you've got various other organization saying divest,
Yeah. That's a big challenge for us, and let me be really clear. We talk about shareholders, right? And of course, you can imagine we have a big spectrum.
Exactly.
We have the people who are saying, "Oh my God, stop with all of this green rubbish. Stick to what you're really good at, drilling holes in the ground and finding oil, and don't bother me with all of that." And then, of course, we've got probably the louder voice in the room, at least today, is what are you doing with all this kind of dirty hydrocarbon stuff? You need to get out of that. And okay, so our strategy really is we believe we start with the customer. The customer is not going to flick a switch. So that the truck company out there with a fleet of 100 trucks, it's not going to happen overnight that they are going to kind of switch off and say, right, that's it. All the diesel trucks are out in down the scrapyard, and we've got all these lovely new hydrogen trucks. Aren't we wonderful? And the office is all on green power. I think we've got to work with our customers because they are going to go through this energy transition over the next 2 decades, right? The capital stock is going to turn over, and we would like to be there with them, supplying them the goods and the services that they need in order to decarbonize and advising them. And that's going to take time. Now, to sell that message to our shareholders, we've got to convince them that we're really strong stewards of an integrated suite of assets and capabilities that serve customer needs in a unique way, using a brand that is most synonymous with energy around the world.
So, Ed, I'm going to jump in. I felt for the first 15 minutes, my job was to be the referee to prize fight, but I'll call it a draw. And
Thank
we'll
you.
move forward. But
Thank you.
The gentleman from Barclays made the point that it's very hard for large companies like yourselves to innovate. I won't pick on Shell particularly, but just in general, large companies, the incumbents, changing their business models on the fly. And maybe you could just take that away as a question. How does the organization do that? And how do you integrate entrepreneurs into your business models?
Yeah, that's a good call. Let me call out on innovation, because I think there's a few things that are going to happen in terms of innovation around energy transition that you've touched on. I think there's a deep technology component to that. Not necessarily in a brand new widget, but having said that, I think electrolyzers have got a hell of a long way to go in terms of becoming more efficient and more effective. Solar panels have probably got more to go. I think the control and optimization of power systems has got a long way to go. But let's, with AI, etc. I think there's that component, but there's also the business model component that I think, our business model for 100 years has been, huge gobs of capital from our own balance sheet into big chunks of steel and cement that produce stuff, and then that's been the with relatively high risk, particularly in the upstream part of our business, but then commensurately relatively high reward. I'm really passionate that we've got to address business model and technology. Let me talk about them separately. On technology, I think we do 3 or 4 different things to try and tap into and access innovation. And I'll admit and be open and transparent and candid with you that it is difficult for a large corporation, right? I don't pretend that. We've seen that around the world. Having said that, you're talking to the company that probably invented the LNG business. You're talking to the company that probably invented GTL as a gas to liquids as a scale business around the world. So we're not immune or without innovation capability. On technology, I think we do a few things. We have our own in-house technology capability, 3 laboratories around the world, and we are gradually pushing those to be much more, biofuels, hydrogen, a little bit less probably proportionately on power, but also carbon capture and storage. So we are doing stuff there. Secondly, we have our own venture fund, and I think, Patrick, you're aware of it. We have, I think, 1.4 billion going into a venture fund. We invest in companies, and we try and bring in technologies that way. So, I don't know, a battery ferry company in Norway, or an electrolyzer company. So we're doing that. And then we have a sort of a tech works. So we have a Shell folks that are deeply embedded with sort of close to university. So we've got one at MIT where we're trying to be really close to that sort of cutting edge of technology that could make a difference, not necessarily in the next decade, but maybe beyond that. So examples would be things like the artificial leaf. How could you harness an artificial form of photosynthesis to be an answer in terms of molecular energy carriers, etc. In terms of business model, I think that's also something that we have to get from the outside. So it's partly through the people that we bring in. Although it may be hard to believe for some, actually, the value proposition to bringing in new people into the company who've got a history in the utility industry or a history in capital venture startups. I mean, I think we managed to bring them in. I think we don't do the best job in the world of helping them grow and sustain, but that's a work in progress. We can attract top talent and harness them. And so, for example, in terms of the funding mechanisms that we're using in our renewables business, we've tapped into a lot of sort of things like, part ownership funds, etc. And you see our competitors doing similar things. And then in addition to that, we're working with universities. So in Imperial College in London, they've just formed the Leonardo Center, which is basically in their business school, looking at what are business models that could innovate and help drive energy transition. And so we're investing in that and bringing those experiments into the company to try and drive our thinking and our processes. And I say slightly flippantly, I go to lots of dinners. I sit next to really interesting and innovative people, and we have conversations about what the world could be like in the nature of energy transition.
And so, what are there technologies you're particularly keen on and that you think will make a big difference to your journey?
I think I worry about picking on an individual technology right here, right now. I think we think very much around value chains. I think, and maybe this is where I put the safe harbor statement up, right? But I think we have got real strength and capability and understanding in the molecular energy carrier value chain. So today, those molecular energy carriers are hydrocarbons. We don't want those, but tomorrow's molecular energy carriers are likely to be hydrogen and maybe ammonia, maybe one or two others. And so it is, my thinking goes, what are the strategic control points along the entire value chain from point of feedstock through to production, through to storage, distribution, and then final sale to the customer. And that's where my mind goes, is look at the entire value chain. Many of those bits of value chain will be commoditized, but where are there strategic control points that we can particularly invest in, where we've got a strength and a capability?
That's very interesting, because for many people, the world is just kind of going electric, right? And solar, the cost, we were hearing yesterday, the cost curves of solar remain strong. It's essentially going to be somewhat free in a decade's time. But that's very different, right? That's electrons rather.
It is, and I think what this is my it's the company view as well, that actually the next decade is one where the electrification of everything is going to be the big mantra, right? I think the stuff that's easy to elect. So one, you can get rid of a lot of coal and a lot of oil and a lot of gas by stopping burning them to produce steam to make power and just putting electrons in their place, right? Okay, exactly. So that's phase one. This first decade is about electrifying everything you can electrify and making those electrons in a green way. You get to a point, though, by the end of this decade, where actually there is a whole bunch of stuff. You can't electrify making cement. You can't easily electrify making steel. You can't electrify long distance trucking or shipping or aviation. And it's at that point in the turnover of the capital stock that you'll start to see quite a significant growth in the molecular energy carriers. Some difficult choices we're going to have to make about which molecules they are. And we can't afford to have a VHS Betamax disaster where we choose 2 or 3 different molecules. I think we're going to make some choices. and then you'll see some big investment, and that's where I think we can make a real difference.
But Ed, before we leave the electron behind, I live in Fulham, and literally 3 blocks from me is Shell's first supercharging station. No petrol on sale at all. And I looked at it and I said, this is wonderful for my Tesla. And then I thought to myself, wait a second, how are they going to make any money off of this? And so just on that concept of moving the electron around, you've made some bets in that area. Maybe help us understand how a business like Shell is going to profit from that, if you would.
So I've worked in and around the retail business in Shell, and you probably know this, that actually the margin on retail fuels is pretty paltry, right? It's if we're lucky, and
it's coffee where everybody
and
makes
there's
money.
A fair wind following, and you know it's a sunny day in Fulham. We're going to make a cent a litre, right? So actually, the reality is there's a little bit of upside, that you've got your customers for a little bit longer than you've got for them refueling. So the opportunity to do the cross sell of the coffee and the sandwiches and the whatever, the Coke and the cigarettes and you name it, that on the road experience, I think is a real possibility. I think retail becomes quite a different proposition though, because let's be really clear. You're going to have at-home charging for a lot of it. You're going to have destination charging, office, supermarket, cinema. So the on-the-road component is going to be, I think, much lower than you would see it today. But let's not forget, not everybody has the privilege of a driveway, or there's a lot of particularly not necessarily in the UK, but in if you go to China or Singapore or whatever, you've got a lot of folks who are in apartments. It's going to be on-street charging, and so the infrastructure for charging, and how you, I think, could come to a customer and say, we can take care of your charging needs, and if it's charging off a lamppost, or if it's charging on the road, or if it's charging at a cinema, you just got the one Shell card, and we're going to surround you with the ability to keep yourself charged. And so that's our sort of mental model of how that works.
And so when you're investing in some of these newer electrification technologies, and indeed in venture capital, is this kind of seed corn to inform your bigger bets, which are going to happen in a decade's time then? Or are they relevant in themselves?
On Recharge, I think we're beyond seed. I think on Recharge, we are at scale investment, because there's a bit of land grab going on. If you have a look at the investments that are happening, there's land grab going on. There's land grab going on in 2 or 3 different dimensions, right? There's land grab in terms of the traditional retail site. There's land grabbing going on in terms of the lamppost charging, so the more the on the street type charging, and then not only in terms of the physical infrastructure of charging, but the gateway technologies of the computer system that sits behind it, that allows you to put your card in the slot in the lamppost and get the charger. So there's the optimization, the software around that is a little bit of a land grab space as well.
Very, very interesting, because that's quite different from, as you say, your heritage expertise.
Yeah, absolutely. Very different. Very different. It's a very different business model, and we've had to recruit a lot of different people, and we've bought quite a few companies in Europe and in North America, now increasingly heading towards Asia with buying. We just basically got to buy it.
Yeah, and you see that trend continuing then, to kind of pull in not just the tech, but the DNA.
Yeah, the tech, the DNA, and in many places the assets, or the access to the assets.
Yeah.
And I can't resist coming back to your very opening statement when you said, 1988, you jumped in your car and you joined Shell. Yeah, I think a lot of people at Shell have been there a long time. It was a wonderfully fascinating place to work when I was coming out of college. And I know that if you joined Shell, you stayed at Shell. And now all of a sudden you have these entrepreneurs showing up, these whippersnappers showing up, if you would, in some cases, sometimes with not a heck of a lot of revenue, saying we're here to transform your business. How does that work culturally within Shell? I'm just curious.
Well, I think the good news and bad news. I mean, if I would say, I would say, maybe I would say this, but we have a board and an executive, sort of most senior executive, who completely get it, that we have a challenge, that we are transforming the company. This isn't about, okay, we're gonna polish a little bit in the corner here, and then we're gonna bolt something on over here. This is, as I've said a couple of times now, this is the biggest challenge facing mankind, and the scale and capability of our company needs to be deployed in making that happen. In bringing in new skills and experience and capabilities, whether that's in terms of the power value chain, or it's how you fund and manage a utility type business, we've got to be absolutely on our game in helping and supporting and developing those individuals, grow networks and grow. We talk in Shell, we talk about talent density. It's not just about, can you get 3 rock stars from the power? You've got to bring in sufficient density of people that they can recognize one another and talk to one another in a language that makes sense. One of my guys who is from the power industry says that, you can look at an investment proposal in oil and gas, and you can sniff at 50 paces, if this is good, bad, or indifferent, and what are the 5 questions you really need to know the answer to if you're going to sign off on this thing. And he said, and I can't, but I bet you I can do that with a power investment, and you can't. And so, I think we've got to grow that capability and have people very comfortable in having that capability inside the company.
So you've actually got to manage different business cultures within the same organization in that case, right?
Yeah.
And
That's not unusual. Although you say, oh, well, Shell's a monoculture. Well, actually, if you go to our Houston office and you meet the guys who've been exploring in the Gulf of Mexico for the last 30 years, and the success that they've got, and then you tomorrow go down to your retail station in Fulham and start chatting to the territory manager who manages the retail network across London, they're not quite the same person, right? There's a broad wealth of cultural differences, I think, in the company.
That's very fair, and yet the heritage skill of the company, as you say, is managing chemicals, large scale plants.
Yeah,
you see a big demand for that in the future, perhaps applied differently, and venture capital can't easily get to those areas because the weight of capital is large, the timescales are large. So why not just focus on that rather than?
I think, do you know what? I think it's going. I've been thinking about this quite a bit. I think the world is changing. If I think about an investment in the Gulf of Mexico, a platform and a few wells, and then a sort of delivery system that goes with that, you can without even breaking into a sweat, you can talk about $15 or $20 billion, right? That's big chunk of change. Talk about a big LNG facility, $10 billion, $20 billion, that trips off the tongue without even breaking into a sweat. The reality of the energy transition, yes, we're going to have to spend that scale of capital, but I don't think it's going to be quite spent in those such large chunks. If I think about an electrolyzer installation or a solar farm installation or a big wind farm installation, you're talking about low single-digit billions of dollars. And so for me, there's a slightly, and a very different risk-reward profile. So I think, although we're going to have to put a lot of steel in the ground, we're going to have to put a lot of concrete on the ground, we have to build a lot of wires and pipes and tanks, and which is very familiar territory to us. I don't think it's quite at the scale of you're betting the farm on this project in the Gulf of Mexico or this LNG plant in Indonesia or wherever.
And maybe just to push that a little bit further, I think there's some technologies, I think they're referred to as breakthrough technologies, that require hundreds of millions of dollars, like carbon capture, or maybe some of the hydrogen efforts that you're referring to earlier, where people are going to pour a lot of money into these things before they realize whether or not they're commercially viable. And how does an organization like Shell think about that? I mean, do you see it almost as, okay, we're going on an exploration, and we're either going to hit it or we're going to miss, or
there's an element of I don't want to harp on about poor old Gulf of Mexico. They're going to feel kind of hard done by. we can drill a well in the Gulf of Mexico, $200 million, and there's nothing there. And we sort of shrug our shoulders and then go on to the next one. So it's not that we're unfamiliar with significant business risk. I think the business risk around bringing new technologies to bear in the market is a bit different to that.
Right.
But having said that, if I think about electrolyzer that we're building in Rotterdam, it's, I think overall with all the facilities about $1 billion. We think that's a worthwhile, and it's not going to sort of pay out immediately in the way that you would with a normal investment, but we think that's a de-risking investment. We've got a way that we can use the hydrogen in our existing facilities today, until such time that there are trucks on the road, or there are storage facilities for storing hydrogen for power storage, or whatever use or industrial use of hydrogen. So we've got ways that we can use our existing infrastructure to sort of slightly de-risk what we're doing. But I completely concur with you. This is an investment to de-risk the future of the energy system. And
picking up perhaps with a left field question, Ed, you can afford big risk, you can afford a lot of money, you can afford long time scales, and you're an energy company. So do you have a house view of fusion, and whether that's something that is investable?
Well, so I mean, Shell, I think very, very long time ago, even before me, if this is such a long time ago, we did have a little bit of dalliance in nuclear, and we decided we didn't like the risk profile in nuclear. And so as a company, I don't see us heading into nuclear. However, in our scenarios, in our thinking about the future energy system, we absolutely believe in nuclear as being a core part of a decarbonized energy system. Ed Daniels is asking me personally now. I don't think we have a house view on fusion. We do have a house view that if you look at the Rolls-Royce thing about sort of small nuclear, I think there is real technology breakthroughs that need to happen in order to help nuclear become a bit more the acceptable face of power generation for the future.
Yep, that makes complete sense to me. I also want to turn back to, how do you work with venture capital companies, with venture-backed companies?
Yeah.
So if there's entrepreneurs out there thinking Shell would actually be a good partner to help me change the world, and what's the best way of interacting?
So our venture unit, I touched on, I think is always out there and should be out there and is out there screening potential opportunities. And if you can't get through to them directly, then I'm very happy to be the conduit. So I'm slightly worried about getting an inbox that's bulging with requests. But we have a process that screens, and I think, let me be really clear. We have a strategy, Powering Progress, about decarbonizing the energy system. We recognize where we're strong and where we're weak. So it's got to fit within the strategy of the company. But we're very comfortable in making investments in if they work, that's great. If they don't work, equally we move on. So I'd be highly encouraging of folks to say, reach out to us. We're always happy to have a conversation about how technology can make a difference in driving energy transition, and we want to be part of that. We want to be on the right side of history, and I think that is going to mean investment in new technologies and in new capabilities to drive this transition.
And if people were looking at Shell and looking at the rate of change of Shell, what sort of milestones should they watch for to understand that you're making progress fast enough, do you think?
I think the proof points you've got to look for are, where are we putting investments? That's one thing. Are we investing in the electrolyzers and in the power systems and in I think in the last 2-3 months we've announced 2 or 3 electrolyzers. That's world scale type ones.
Yep.
We've announced a couple of investments in biofuels in Europe and in Asia. We've got a few more in the pipeline yet to come. So it's those sort of things. That's one. I think you've got to look, where are we turning up with our policy positions and our policy and advocacy?
Right.
What are we saying? Are we supporting internal combustion engine ban? Yes, we are.
Okay.
Are we supporting mandates on jet fuel for biofuel? Yes. So
Okay.
it's that. But then also, I would say, look at what we're doing in the traditional portfolio. When I drove down to that refinery in 1988, Shell had 46 oil refineries around the world. Today, we have 5, and they are being converted into energy and chemical parks, far less just basic refining of fuels. It's going to be chemicals, it's going to be lubricants, it's going to be asphalt, it's going to be chemicals. Now, there's some fuels that's a byproduct, but it's a byproduct, not a main product.
Yeah, and you're touching on a question I was about to ask, actually. I'm going to ask anyway, which is this is not asking you for a forecast, it's asking you for a vision. So what kind of, what if you go out that 20 years, what does Shell kind of look and feel like then, really?
Yeah, I think today, tomorrow, and certainly in 20 years, there is a partnership between Shell and its customer base that is proactively driving the energy transition. Right. That we are providing the clean energy that our customers need, and whether that's in the form of electrons from a very significant generation and trading capability around green electrons, whether that's in terms of the biofuels or e-fuels that they need, or it's the service they need of carbon capture and storage, or it's the emergent need of hydrogen that they have, that we're there shoulder to shoulder with our customers, perhaps a little bit pushy, driving them into energy transition, a vocal and respected voice with government, and a highly attractive part of many share portfolios that people want to own, because they can see that by investing in us, they are helping to drive the transition, that here is a company on the right side of history, making a difference in energy transition at scale globally.
Very good. And by the way, I want to take a moment or two to thank you for coming on board and talking with us, because I was at the start thinking and taking the view, the somewhat sort of St. Augustine view of, that quote, make me chaste but not yet, because this is too good as it is. and so you have genuinely gone a long way to convince me that Shell is really seriously trying to drive change.
We are, and there is I wish I could put a camera in our executive committee or our board and listen to some of the conversations we're having around the passion that we've got for driving the energy transition, and it comes from twofold. Of course, probably by reading the newspapers, you'd think we're running scared from activists but actually, let me turn it upside down and say to you, and probably ties into many of the folks who are here and listening. Energy transition is a massive business opportunity. Absolutely. It's an opportunity to embrace brand new forms of energy that are not sort of being pushed at scale today, and we really feel we can be part of that, drive the energy transition, and make a whole bunch of money in doing that.
Yeah, and indeed, when we're giving talks about the energy transition, we regularly say the need is the opportunity, right? And that's how capitalism is supposed to work, actually.
Yeah. And I think, funny enough, we had a conversation with our finance leadership today, and we were talking exactly in that way. We got to be really careful that we don't characterize this either in Shell or in your company or anywhere else as, well, we've got to do this because there's a great big threat over here that if we don't do it, we'll get banned, or we'll get our shares divested. No, hang on a minute. There's an opportunity here to be grasped.
Yeah, and in fairness to you, I'm now going to reflect on the private equity industry, in which we've been taking part in a number of debates. So we tend to find that the organizations who do large buyouts, who are more used to companies with incumbent assets, when we talk about climate change, they view it as a risk. And when we in venture capital talk about climate change, we view it as not just moral imperative, by the way, but actually as huge opportunity. And that psychological difference, I think, is profound and important. So it's great if you come out on the opportunity side, I think.
Yeah, no, absolutely. And frankly, back to the point we've made through this discussion a little bit about people and culture and everything. I mean, it's quite hard to throw the covers back at 4:30 and saying, "Oh, right, okay, I'm going to comply." I mean, it's hardly the thing of dreams, right? If there's something about opportunity and making a difference and driving positive change, I think it's a far more inspirational message for your staff, for your shareholders, as well as for civil society.
And even just getting the talent to have a great company, you need that vision, I think.
Yeah, indeed.
Ed, this has been insightful and a pleasure, and you've been extraordinarily open, for which we really appreciate, and I'm sure our audience have found it fascinating. So I just want to say thank you on behalf of myself and Rob and the entire audience. That was terrific.
Patrick, it's been a pleasure to be with you, and look forward to interacting again. Thanks very much indeed. All the best.
Thank you, Ed.
Thanks. Bye-bye. Thanks, Rob.
And take care, everybody. Thank you for listening to this episode of the Sustainability Talks podcast. To find out more or join as a guest, head over to the ETF Partners website at etfpartners.capital. You can also connect with us on LinkedIn and follow us on Medium at ETF Partners. Until next time, thanks for listening.